Good morning, guys. It is Friday, July 12th, 2024. This is Bathrobe business. I got the coffee. I am extra groggy today for some reason, and I still haven't showered. So let's jump into it. So I'm going to talk about a couple stories. I'm going to talk about bank profits. I'm going to talk about other inflation news that has come out that's contradictory to yesterday. I'm also going to be talking about population size. That's going to be actually I feel like the most interesting story and what's going to drive this video home. So let's just jump into it. The first story I'm going to talk about is just bank profits. So it's kind of funny because JP Morgan and Wells both shared profits today and the stark difference between them. So let me make sure you're seeing my screen here, blah, blah, blah. Yes, here we go. So JP Morgan just had a monster quarter. This is second quarter results. It rose 20% to 50.99 billion in revenue. Well ahead of expectations. There's multiple reasons as to why. You can read the article. I just think it's just amazing how stark the difference is between, JP Morgan and Wells Fargo. JP Morgan is such a large bank that it almost doesn't matter what they do, because if you read the articles, JP Morgan is just coasting. They're not really doing anything that crazy. Whereas in opposition to Wells Fargo is tumbling because net interest income falls short of estimates, mainly because interest rates are so high. So people aren't borrowing because the financing costs are too high. And Wells Fargo's primary way of making revenue is through lending. So they're suffering because of that. Whereas JP Morgan, in previous stories, we've shared this before, that JP Morgan makes money just off of holding assets and letting the inflation grow on it. So it just gives you an idea of the stark difference between these two banks, how powerful JP Morgan is that they could do nothing and make money, whereas Wells Fargo needs to work incredibly hard in order to be able to sell loans, sell mortgages, sell car loans, etc., in order to be able to inch out any income. Their second quarter revenue was only 11.92 billion. You can see the stark difference between those two. I just thought that was an interesting story. Next story I want to jump into is much more important. So it's U.S. produce prices will rise slightly more than forecasted. So PPI numbers came out today. Remember, producer price index is considered to be a better measure of inflation because it's inflation before it hits consumers' hands. And there's actually a better story of this on Yahoo Finance. I just wanted to undercut because Bloomberg is talking about not PPI specifically, but produce prices. And there's an article from Fox Business that actually says the same thing. So this article from Fox Business, hopefully this video doesn't play. You can watch the video. It's disruptive. So the Fox Business is reporting that in the last 3 to 4 years, cost of groceries have gone up like 25%. Let me pause this. Hopefully it doesn't play. Okay, it doesn't seem to be playing. So let's jump into the people.
I sort of looked at the shelves and I saw that there was white space. There really weren't chocolate snacks that were lighter and better for you.
Shut up. Okay, I don't know if you guys can hear that when it plays, but it plays in my earphones. So U.S. wholesale inflation prices picked up in June in a sign of price pressure remains elevated. So wholesale prices in the United States rose by a larger than expected 2.6% last month from a year earlier, a sign that some inflation pressure remains high. Labor Department said Friday that its producer price index, which tracks inflation before it reaches consumers, rose 0.2% from May to June, after being unchanged the month before. Excluding food and energy prices, which tend to bounce around from month to month, the so-called core wholesale prices rose 0.4% from May and 3% from June of 2023. So still powerful pressure. And this isn't a surprise because yesterday I shared with you guys numbers from Delta, Southwest, but many other companies. But the most important chart I shared with you was the rise in labor costs nationally across the United States. In fact, some of the largest labor costs rose the fastest outside of blue districts. So a lot of people will say, well, California passed a new minimum wage law. California was actually lower on the list. So most of the larger rises in energy in labor have been in red areas. So it has nothing to do with the laws. It's just about the fact that labor is becoming more and more expensive by the day. And that is a powerful driver of inflation. If your employees demand more money, you need to charge higher prices. And that's what's going to jump into our next story and the last story, which I believe is the most interesting. So I want to share this tab. So this is talking about global population. This is something I've brought up on the channel before. It is something that Peter Zion talks about excessively. And I don't agree with Peter Zion on a lot, but I shouldn't say a lot. I think that he has a very single polar view of the world, of America remaining on top. I think he has a kind of a neocon, neo-lib perspective on politics, but I think it's unquestionable with what he has talked about with global populations, and I think it's absolutely right. So this article underpins that. So I just want to read a couple excerpts from this article. So global population to peak within this century as birth rates fall. This is a global phenomenon. This is not located to any one country. Blah, blah, blah. Global population is projected to grow from 8.2 billion in 2024 before peaking at around 10.3 billion in the mid 2080s. This number is expected to gradually decline to 10.2 billion by 2100. So we're losing 100 million people within about 2 decades. This is actually 6% lower than anticipated a decade ago. So the shrinkage of the population is actually an exponential increase. So it's an exponential decline. And what's funny is I believe these numbers are actually undervalued because Peter Zion talks about this, that China still is overestimating their population. And so this is probably going to be a higher decline in population growth than what this report is talking about, because just in the last decade, they revised 6%, a massive reduction. And this, I still don't believe it's taking into account a lot of the newest population numbers that are coming out. Just last year, China had a new population number that came out that showed pretty aggressive negative population growth. Korea might not even exist in the next 50 years, South Korea specifically, because of fallen population growth. Japan has been in that boat for a while and is continuing, but this is a problem that is happening in the entire world. The U.S. is having this problem as well. It's just because of immigration, it's less stark. But U.S. population, less people are having children. Europe, less people are having children. Even in Latin American countries and parts of Africa, this is a global phenomenon. It's one of those things that there is no good single one explanation for as to why, but this is a powerful pressure that has never existed in the world economy. Because since the beginning of the economy, since the beginning of time, essentially, populations have always grown. Despite the fact that there were wars, despite the fact that there were pandemics, it always bounced back simply because there was always population growth. And so just coasting off of population growth, your economy will grow. But in an environment where the population shrinks, you're not going to be able to grow the economy the way you did since the beginning of time. We are entering a new paradigm for the economy, a new paradigm for capitalism in general. And this is why inflation is going to keep running higher. It doesn't really matter what happens with CPI prices, with PPI prices on a daily, monthly, or yearly basis. This is a trend that is going to continue for the next 100 years and probably more than that. And so that's why this is so significant, is this is one of the biggest reasons of why it doesn't really matter what's going to happen with inflation numbers on a day-to-day basis, month-to-month basis, or a year-to-year basis. I've talked about it on this channel before, that boomers are retiring. Gen Xers are a smaller population. Millennials are larger than Xers as far as population, but they're still down from where boomers were at the same time period in their lives. And then Gen Z is the smallest population we have ever had in the United States, congruently to smaller than even Gen X, which are their parents, right? Gen Zers are the children of Xers, millennials are the children of boomers, but with each subsequent iteration, it keeps shrinking lower and lower and smaller and smaller. So just off of population growth alone, this is going to be a reduction in the economy, and it's going to cause higher inflation because less people, less workers mean you have to pay more to people in order to incentivize to come to your company. This is also probably going to lead to much more centralization, right? I mean, you're going to see less companies because there's just not enough people to go around. There's going to be less consumers. There's going to be less people buying, which means less companies, which means less innovation. I have a few theories on where this is actually going to take the economy in the next 50 years. I'm not ready to share them on this channel, just simply because I think a lot of people go, okay, Terrence Howard, calm down. But I will probably share them with you in the coming weeks and months as I flesh out some of these ideas, and I'll get some data to support the direction I think the economy is going to go. But I think one area that I think is unquestionable is inflation is going to continue. I still think actually the Fed is going to cut interest rates, despite the fact that I just reported PPI prices going up. I think there's too much inflationary pressure. There's been too much signaling from the Fed, from Jerome Powell. And I think there's just too much pressure from the White House and from Wall Street to cut interest rates. So I think we still will get a cut sometime in September, despite the fact that it's unwarranted and unnecessary. that's pretty much it. So that's the video of the day. I hope you guys have a productive Friday. I hope you have a great weekend, and I'll see you guys back here Monday. Take care.